This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the latest edition of your TF Metals Report podcast highlights. This time for the last week of February and first week of March 2023. Again, a daily podcast summary is something you get as a member at TFMR. It's only $15 a month. So basically for 50 cents a day, you are 100% updated every single day, not just on gold and silver, but on all markets and the global economy. And this year, very important year. It's money well spent. We encourage you to come check us out, tfmetalsreport.com/subscribe. As the week began on February 27th, one of the things we discussed in our daily podcast was how silver led gold and the gold miners down last year, and then back up last year, and now back down in February. That's important because silver broke down through its 200-day moving average last Friday and closed below 21. So this week is a very important week. In fact, next week too, for silver. It needs to get back above 21 and stay there so it can make a move on its 200-day moving average and at 22. So that's all part of what we discussed back on Monday, February 27th. The first one is gold and silver last year at about this time, okay? Now, in this one, silver's on the top and gold is at the bottom, okay? Notice both of them peaking on the same day in early March, right after all the stuff that happened that first weekend of March. And I put the little arrows on there to show you those big old reversal candles that followed. And it was at that point, again, we've seen this lots of time. You get that big reversal candle like that, like we got 3.5 weeks ago, most recently, your goose is cooked for a while. Okay, now, the spread back last year between the 50-day and the 200-day moving averages was a lot more narrow in silver, as you can see, the red line versus the green line. So where silver and gold both tapped their 50-day in late March and then re-rallied, silver then broke down through its 50-day in April, really at about the same time that gold did. But then gold had a lot farther to go before it broke below its 200-day, where silver broke through its 200-day just 2 or 3 days later. And again, that began that long slog downward of April through May, where it went from 2650 down to 2050 in 3 weeks? And almost every single, I think it was 18 out of 19 days were down. But notice how the trend continued. Once it got below the green line in late April last year, below its 200-day, it was just down every single day, right? Gold kind of followed it, hung around, bounced around its own 200-day all the way into June before finally collapsing. Okay, so that's just a little history lesson. So now look at the current situation. Again, notice the big reversal candles now in early February, especially the one in gold, the lower chart, okay, on the new one for this year. Okay, well, the goose is cooked, so down we go. Now again, silver takes out its 50-day. Gold, it took another week or two before it took out its 50-day. Silver last Friday took out its 200-day. Gold hasn't done it yet. This is why I keep saying to you, it's so important for silver to turn, for silver to bottom, bounce from here, somewhere near 20 or even from where it was today. Get back above 21. Tuesday was the last day of February, and so at TF Metals Report, we always take a look at the monthly charts. And here's your monthly chart of COMEX Gold. Very important to always be checking the longer-term charts, the monthly chart, the quarterly chart, so you can get a feel for the larger long-term trend. And this monthly chart shows you the larger long-term trend, massive cup and handle formation that once it resolves to the upside later this year and into next, it's going to target some pretty big numbers, well above $2,000 per ounce. So here's a look at that monthly chart for COMEX Gold as the month of February comes to an end. Finally, it's the end of the month. So what do we see on the gold monthly chart? Oh my God, that's a big ugly red candle. But again, as I tried to point out earlier today, also ugly red candles, 2 of them in 2021. You really see the big one back there in April of 2021, right? And oh God, oh, we're doomed. Oh, trend line going down, all this stuff. And then what did we do? We just mainly went sideways the rest of the year. Not that I want to go sideways for the next 8 months. My point is, it didn't just fall out of bed and go all the way down to 1400 because of one big, massive, ugly red candle. And the same thing is true now, okay? The larger picture, there's this huge bull, huge cup that goes from 2000, that's an 8-year cup. And believe me, we lived every single friggin' one of those 8 years. Now being followed by the breakout handle that is extended now for 3 years. All right? So the big picture, this is a very bullish chart. And when it goes and breaks out the upside, we're going to be talking 2,800. But for now, still going sideways. As last week came to an end, we figured we were due for a bounce in COMEX gold, and Wednesday, March the 1st, brought the third consecutive green candle to the daily chart. Looks like gold has broken its recent downtrend, found some support above its 200-day moving average, and now trying to claw higher. Could it break a weekly chart losing streak that stretched back nearly a month? Well, we'd know more by Friday, but on Wednesday, we were sure to note that the daily chart was at least looking a little bit better. This chart worked out okay. No fun to watch price go all the way down, but it broke out of its little downtrend yesterday, found support right in that rectangle that we were calling for support all through February, bouncing from very near its 200-day and now back above 1840. Let's extend that. Let's hold that through Friday at a minimum, okay? No Thursday conversation this week. We'll get back to those free public podcast discussions next week. On Thursday, March the 2nd, we took a look at a number of charts on our daily podcast. And one of them was Agnico Eagle Mines. This is an old favorite of mine, back from when it was just simply AEM. But once they merged with Kirkland Lake, which was a stock Eric Sprott told me about all the way back in 2017, and I held it from $7 to $40, whatever it went to. Well, any combination of AEM and Kirkland Lake sounds pretty good to me. So it's one I watch closely. It's one many folks at TF Metals Report watch closely as well. It has gone through a sharp pullback. And the latest earnings report came in slightly below expectations. And so it's been pretty weak. But does that create a buying opportunity? Well, that was one of the things we discussed Thursday, March the 2nd. And finally, one more. You know how much I love AEM. I've owned it for years. Owned it before they merged with Kirkland Lake. And now own even more of it because of that merger. You know how I feel about Kirkland Lake and what good it's done for me and for many of you going back to about 2017 when Eric first told us about it at $7 or $8. Anyway, what are we going to do with AEM? Right? This last earnings report missed by a penny. You know, they had a few challenges, all that stuff. Of course, prices fallen with gold and everything else. But this is a pretty dramatic move from 58 down to 44, 25% in a month. Again, they're all going down, but nonetheless, we want to see this turn around too. 46 obviously is an important level to hold, and you can kind of say over the last 2 weeks it has. We want to see it get back above this 200-day moving average now. What we don't want it to do is fiddle around like it did in May and June and then fall farther, right? We don't want to see it come up, not be able to get above 48, and then start breaking down through 44 and 42 and all that crap. No, we want to see this turn. Preferably, gap back up. Make a little island reversal out of these 8 or 10 candles of the last 2 weeks and gap back up to 48 tomorrow or sometime next week. I don't know what would cause that. Something geopolitical, maybe, who knows? Regardless, back to the point. Let's watch AEM. I have to move a lot of money around this month because I got to make my annual SEP IRA contribution. I'm going to have a whole bunch of investable cash in that account. I'm watching AEM closely. And if you're into the miners, you might do the same. And on Friday, March the 3rd, we are going to close out a very strong week for COMEX Gold. Price was up about 2%, all while interest rates are rising, expectations of higher Fed funds rates are rising. But man, gold's hanging in there, breaking a 4-week losing streak, and now solidly in the middle of its range and above 1850. Again, now this is important to understand. I don't want to go around talking about, aren't we happy that gold is even over the last 12 months? However, think about all that has happened in the last 12 months. The war in Ukraine, skyrocketing interest rates, the dollar rallying 20 or 25% at one point. And yet, if you go back to this time last year, the first 3 or 4 months of 2022, gold averaged about $18.50. And here we are. This sets the stage to skyrocket higher from this level once the Fed starts easing and cutting again. It's going to be a very exciting back half of the year and a very exciting 2024. All I ask is that you hang in there and wait for it to come to you. And then come back next week for another edition of the TF Metals Report podcast highlights. Thanks for listening and have a great weekend.